So, as we know, we live in an age where seamless cross-border transactions are no longer viewed as a luxury, but an exception. With that said, we will now commence the second moderator discussion for today on the very topic. And our topic today is inter-regional payments, a case for deepened regional integration. The subject of inter-regional payments has been around for quite some time, with early formal attempts at the development of an inter-regional payments arrangement system in 1969. While things may have been off to a far less favorable start, the merits to be gained from the development of an inter-regional payments arrangement continue to hold true today. The CAB has developed a concept paper on this subject, a case for the development of a regional inter-regional payments arrangement using a real-time gross settlement system. I have this morning the distinct pleasure of being joined today by Mrs. Fabiola Herrera, Deputy Manager of Systems and Innovation at the Central Bank of the DR, who has a wealth of experience within the industry, having worked in the private banking sector for several years and over 2 decades in central banking, as well as Mr. Francis Fontenelle, Senior Banking Specialist within the Banking and Monetary Operations Department of the ECCB. Francis currently heads the Payment Systems Development and Oversight Unit. Prior to joining the ECCB, he served in various senior capacities in the government of St. Lucia. Thank you both for joining us today. Welcome. Francis, good morning. I think you're still on mute.
Apologies.
Oh, wonderful. There you go. Crystal clear. Okay. So I think, Francis, you are going to start us off this morning.
Yes, indeed.
All right. So I hand over to you.
Yeah. Thank you, Wendy. Thank you for having me. And it is my pleasure to have a brief discussion on the issue of intra-regional payments, intra-regional trade, intra-regional payments. I want to refer to an article by Dr. Marion Williams some years ago, where she said cultural similarities and strong trading links within the Caribbean prompted early efforts at mutual support for trade. She also said that it was felt that trade cooperation would lead to increased output, higher exports, thereby resulting in accelerated economic development. That is not just her thoughts. And those of us who did international trade, Ricardo the economist would have posited those views as well. From trade, we have increased international and regional, well, increasing an international trade results in increased cross-border payment activities. We cannot have trade if we do not have payments. They go hand in hand. So any trade arrangement must be supported by an integrated payment arrangement, which includes the agreement on reciprocal payments and credits. The base of any payment arrangement lies within a payment system. And what is a payment system? As we all know, we're all bankers. It facilitates the flow of funds from buyers to sellers. It is the system used to settle financial transactions through the transfer of monetary value. Okay. And the smooth functioning of the payment system is critical to the development and well-being of the economy, both from a regional perspective as well as an intra-regional and international perspective. Therefore, it is necessary to ensure that the payment system, which supports the trading arrangement, is efficient, it's robust, it's safe, and in today's world, it is driven by technology. As you have indicated, Wendy, in the CARICOM region, we have a history of our trade and payment arrangements, commencing with the intra-regional payments, which is a bilateral arrangement. Then we had the CARICOM multilateral clearing facility. Then we moved on to the CARICOM travelers checks facility. So there have been a multiplicity of arrangements to deal with our trading, well, payment arrangements to deal with our trading arrangements as the trade arrangements evolve. Now the question now becomes, what is the value of international? Well, the value of inter-regional trade tends to be influenced by the price of oil, but the volume of trade has pretty much remained pretty constant, albeit on a decline. So the question that we have before us now, where we have to marry the two because they are positively correlated, that is trade and payments. What is the data showing on our action? As I said, our action should be driven by data. And what is the data showing with respect to the forecast for inter-regional trade? We know the world has gotten smaller. We have trading giants that can get goods to us within a short period of time. 15, 20 years ago, that was not the case. And therefore, the cost of commodities can come down a bit if those international giants can produce at a lower unit cost. So we have to ask this fundamental question. Should we protect intra-regional trade at all costs? Perhaps it's a political economy question, and we may not be able to answer it here, but it is something that we have to give thought to. For me, I don't envisage a period where intra-regional trade will be non-existent, notwithstanding costs. And we have to be mindful of the current developments taking place. The whole issue of the withdrawal of correspondent banking relations with commercial banks in the ECCU. Okay, my governor, Dr. Mr. Timothy Antoine, would have underscored the necessity for a resolution of the correspondent banking issue, because it has a far-reaching effect on the ECCU and the CARICOM region in general. It will affect the remittances, it will affect the tourism sector, it will affect transfers. So it certainly will have a debilitating effect on our economies. Another issue, again, we have to deal with is the COVID and the supply chain disruptions. We are seeing steep increases in the prices of commodities, scarcity of certain important commodities, and the shipping costs skyrocketing. We may consider this to be temporary, but we have to think again. In the event, is this our last global pandemic? I mean, we don't know. Should that situation arise, should we be in the same position? How do we protect ourselves from exogenous factors that can potentially disrupt our life and by extension our development? One thing we know is that we trade among each other. However, our settlement our settlement exists beyond our shores. Pretty much most of us trade, but we settle in US dollars. So we trade, but we settle outside of our region. So perhaps it might be opportune for us to revisit the development of our regional payment system. Okay? The prerequisite of an effective regional payment system is that it must be safe and secure. This means that it must have an effective and complementary legal and regulatory framework in each jurisdiction. It will require harmonization of the framework for oversight, for regulation, for supervision, with effective cooperation from the regulatory authorities. Okay? Strengthening the regional payments, strengthening regional payments it has regained recognition in the CARICOM area, especially among central banks. Why? Because regional cross-border payments are considered to be costly and inefficient. Sometimes a transaction between your neighbor can take 2, 3 to 4 days for it to settle. That is considered to be inefficient. Also, central banks are looking at the reserve currency. Should we have to be spending the US dollar for every little transaction that we do? Or can't we just leave the US dollar, our reserve currency, for when we need to deal with serious issues? Can't we have a situation where we offset trade? Can we find other means of settlement which does not warrant us having to always refer to the reserve currency every time we undertake a bilateral transaction? Okay, and the need. So therefore, what they're looking at is the need to reduce the usage of the reserve currency within intra-regional payments. Now, there are a number of options that are out there and are being discussed. Some of them, like I said, they are at the discussion phase, and as the discussion continues, there will be some level of elaboration. But we have heard of the central bank digital currency. It is new, but can we foresee or envisage the use of the central bank digital currency in assisting us in executing settlement without having to use on a regular basis the US dollar? I will say that I don't think any settlement will require absolute non-usage of the US dollar. But what the central bank is looking at is the constant use of it. Can we find a mechanism whereby we can do bilateral settlements and on a final basis we use the US dollar? But for every single transaction, we think that there may be and there are possibilities that can exist for us to not to have to use the reserve currency for every single transaction. So we have the use of the central bank digital currency. We also see the use of bilateral swaps. Bilateral swaps would not require a settlement every instant a transaction is done. Perhaps between the two parties, they can agree for settlement cycles, maybe every month, every 6 months. And if it is that the trade is reciprocated between countries, then maybe over time there may not be the need for anybody to take out or to settle in a foreign currency. We also have a currency clearing arrangement, and we have that situation that currently exists between two countries where the trader, the two countries agree to swap each other's currency at pretty much a specific exchange rate within a particular point in time. So therefore, that reduces the need for the US dollar to be used or the reserve currency to be used. Also, we have what we refer to as a potential regional real-time gross settlement system, which does have the usage of the US dollar in the settlement cycle. However, it reduces the constant use on an individual transaction basis. So therefore, intra-regional payments is something that we have to look at. One, the issue is how do we see inter-regional payments in the next year, next 10 years? Do we see a preponderance of trade taking place with the outside world as compared to the inter-regional, to the region? Or do we see, an attempt by us to maintain that inter-regional payment experience? Should we maintain it at all costs, in other words? And so these are the issues that I want to bring up in terms of what we can discuss later on in the presentation. So Wendy, this is it for me. No.
Hello, everybody. Um, um, I was expecting Wendy to jump in. So it's my pleasure to be here sharing with you, as I have done for the last maybe 5 years. So I feel like I'm at home with my friends. So I would like to share in a very brief presentation with you that tells a short story regarding payments and cross-border payments and intra-regional payment systems. As you know, we have a system called SIPA. Now we changed the name from SIP to SIPA. That interconnects all the RTGS systems of the central banks of the Central American Dominican Republic, and this has been live since 2011, for 10 years now. I come from the world of payments, and in the last few years, we have seen a revolution without precedence in the payment industry, like never seen before, and it is impacting not only the domestic payments but also the intra-regional cross-border payments. The pandemic has a big role to play in this because the last year and this year we have seen an extraordinary wave of new players that want to be part of the payment ecosystem of the countries and of the world. So I'm gonna share this presentation. Please let me know if you can see it. Okay, so this is a very short presentation, has only two subjects. One of my first slides that is something you have already seen before is the slide of the new players. Maybe 20 years ago, when I began talking about payments and clearing houses and checks, we never imagined that by 2021 we would be living in this ecosystem we're living now. People seem to like them because they're cheaper, they're very easy to use, and they have less requirements than the formal banking financial system. They pose challenges to the regulator, of course, the anti-money laundering, the regulation, and lack of information flows. We need information to plan the monetary policy. We need information to know the health of a financial system of a country. And also, if they don't come under the umbrella of central banks or bank superintendencies, we have the risk of losing control of how the money flows. And also, we are going to be unable to protect the customer, which is our main goal at the end. So, as I said, today, the general trend is towards digitalization. With the pandemic, this has had a giant boost, and globalization and no barriers for trade and finance operations. But still, cross-border payments are expensive and slow. And many of these companies that offer cross-border payment services, they do not operate worldwide, and they do not have clear rules regarding the local regulators. So we need to think about this. So why is this happening? Because we have companies
All right, so I think we may be having some issues on the connection with Fabiola, as I did a few minutes ago. So, Francis, while we wait for Fabiola hopefully to join us again, can we get Francis back in? Great. So, Francis, let's continue the dialogue while we see if Fabiola is able to get back on with us this morning. What has the general reception been towards the idea of an RTGS, a regional payment system?
Well, I think what the discussion is, there are a number of options out there for an intra-regional payment system. And there is need not to bias any particular option. Let the data show which one is best for the region. But I will tell you that it has been looked at from a short term, medium, and long term. Certain options are short term options because we think intra-regional payments, need to be looked at closely and immediately. So some options are short term, some are medium term, and some are long term. So I think the RTGS is seen as a long term, the regional RTGS, a long term solution, because there are a number of issues that will come up for the execution of a regional RTGS. The legal framework is one that is important. So and I think when Fabiola, perhaps when she gets back in, on board, she can explain to us the experience. But I think, how do we get the legal framework in place for a regional RTGS? Because we see it as a long-term solution, which cannot resolve overnight.
Right. So we do recognize that there will be quite a bit of foundational work that needs to be done in order to make a determination as to the best way forward. But if we listen to the discourse that we've been having over the past couple of days and hours, certainly, and even you alluded a little earlier to the US dollar currency and the underpinning of our own currencies. Do you think that this is a viable option to address the current correspondent banking challenges that we have been facing in the region? I believe we may also have a question already coming in for you. So we will begin to take some questions, and hopefully Fabiola will be in a position to rejoin us.
Yes. I think because in the regional RTGS, there will ultimately be settlement. Okay. However, when you compare it to the current situation where you have every country, every central bank dealing directly with its counterparty. So I suppose with the regional RTGS, you have one central bank dealing with a counterparty for all the banks. So then that reduces the number of transactions going through. And I think in that way, I can foresee, yes, there being some kind of respite for the whole issue of the correspondent banking issue.
Right.
But there is still the issue that settlement will take place eventually. But once settlement takes place, it has to go through a correspondent bank. But it reduces the need to have 10 correspondent banks. The regional RTGS may just have the need to have one correspondent bank, as opposed to right now where every central bank will need a correspondent bank to work with.
Okay, and then I suppose there is also an argument around the expense that our indigenous banks, or certainly the banks in the region, face when it comes to dealing with individual correspondent banks. And so perhaps to your point, the fact that everything will be funneled through the central bank perhaps puts us in a better position from a negotiation standpoint, and also addresses the issues that the correspondent banks have begun uh, to verbalize, from the standpoint that they are also driven by price. They are also driven by volumes.
That's right.
Okay. Can my back end team give me a sense as to whether or not we've lost Fabiola, and so we can proceed with Francis? We have lost Fabiola. Okay, so Francis, you're in the hot seat. Apologies for that. So we know that you have begun to consider it. What has changed from your early attempt to have more confidence that a collaborative approach to intra-regional payments will now work? What has been the driving factor there for you?
That's a good question, because I think the more things change, the more things remain the same. However, I think right now the whole issue of the correspondent banking issue is one. The whole issue of the COVID is another one. So we foresee that there is need a concerted effort on the part of regional governments to come together, to work together, and by extension, to have a payment system strategy that everybody can benefit from. Currently, that discussion is taking place, because the whole concept of having to get commodities from outside and having to pay for commodities, and the whole issue of, okay, I mean, you have to be politically correct in this kind of environment. But should should one currency control you? Suppose that particular country says that. I mean, the payment system is political. A country can say to a country, you are not, you can no longer trade in my currency. And therefore, we saw it. We have seen it happen on the international scale. It may not happen to us, but we have to think of all possibilities. So we have to be thinking in that particular vein. In the event that, okay, we shouldn't put all our eggs in one basket. And so therefore, I think that we should find a means where we can work within ourselves and not have to resort to an external environment to validate, the trade among ourselves, because that's what the reserve currency does.
Okay, all right. So thank you for holding the fort with us while Fabiola dropped off for a minute there. I know that she's back. Fabiola, clearly, I was not able to introduce you the first time, so maybe now that we're going to do it again, we will have a smoother process. So Fabiola, welcome back to the stage with us. I know that you got lost somewhere, and I don't think that you're quite clear on where you went down. Clearly, I was off as well. So I think the last slide that I saw was perhaps just the first slide. Perhaps we can get an indication. Ray, can you help me in terms of where we were? I think we were on payment partners, which was the first slide.
I was talking about the new players in this game. I can do it live without the presentation, just to make sure, because
Right.
with the presentation on, I cannot see the chat, and I cannot see you. So I was saying that today we are living in a very special age, because we have a lot of new players on the payment scheme. I was telling you that I come from the world of payments, and the revolution in payments I'm seeing now in the payments is seen. It's something unprecedented that I have never seen. I've been working in banking for 40 years now, 25 of them here at the central bank. And what is going on today, I have never seen it. All the fintechs, all the new products and services, and all the payments going digital, pushed by the pandemic. And I was mentioning that the most important thing is that people like them, those new players and those new payments services, because they are cheap, they are easy to use, and they are less. There are less requirements to use them. The challenges this poses for the central banks is that we need to work on anti-money laundering, on regulation, and also in the lack of information flows. So why do central banks need information? We need information because we need to plan and determine the monetary policy of a country. And for that, we need information. If half the payments, half the movements, the financial movements of a system they happen outside the official payment ecosystem, then we won't have any clue on what's going on and how rich the country is. And we also are not going to be able to apply anti-money laundering measures to those payments happening outside the loop. So it's important that central banks include the new players in some way on the national regulation. So having said this, I want to move to cross-border payment systems. As Francis said before, everything is going towards digitalization. And everything is so easy today, and especially after the pandemic, and we are so in love of working this way. I would love to have you here in Dominican Republic like a few years ago, but this is very, very easy to connect and to communicate. But still, cross-border payments are expensive and slow. So they pose an obstacle for this. This is related to something that also Francis mentioned, which is digitalization of money. If everything is going digital, why isn't money going digital? And I think there are two ways of doing this. Some central banks may say, okay, we are going to issue central bank digital currencies. Some other countries like El Salvador are going to say, I'm going to assume the Bitcoin as the national currency, which is a digital active. But there is, in our countries, I don't know if it happens with you, we have a lot of people that needs to be financially included. And we have a lot of issues, social issues to deal before we say, okay, we're going to issue digital money. I think the first step is to make all payments digital. And by all payments, I mean domestic payments and cross-border payments. And for that, which is really easy to do if we want to do it, we already have the payment systems infrastructures in every country. So we also need to deal with the legal aspects of this. We have the technology, which is now much better than the one we had 10 years ago when we began our project in Central America and Dominican Republic. So you need to work the legal aspects. The legal aspects are really easy to tackle because you only need to have like a common agreement, and you have the CARICOM. Within the CARICOM, you can do a lot of things we didn't have the means to do when we did our regional system 10 years ago. So you don't need to change local regulations. You only need to have one international regulation that applies to all the countries and include all the principles that need to be respected when operating a regional payment system. So we thought 10 years ago, and I still believe that regional integration of financial infrastructures is a solution for the problem we have here, which is the cross-border payments, including the remittances, are slow, are expensive. So and many of them are delivered in cash at the endpoint. So our system, when we began working with it 10 years ago, we decided to take advantage of what we had. We didn't build a new system. We just interconnected our national payment systems in one bigger network. So it is based on SWIFT, and so SIP was born in 2011. I can show you one slide. I hope this doesn't take me out again. And with that, I'll finish. Let me show you this. Hold on. Also the audio and share. Okay. So this is the operations flow. A client in country A using his internet banking can send money through the central bank of his country to this client in country B that is going to get it immediately. This is real-time gross settlement system. We allow 15 minutes or more for the compliance officers to do their job, but as we are sending money to a client that is already defined as a beneficiary in my account, it is already cleared. So you see here the Central Bank of the Dominican Republic, because we are the hub of the system. And this is a thin copy. You see the Y of SWIFT. It is very easy to use. It is very easy to start working with it once you define the legal aspects. This is the amount of payments and operation we have through the last 10 years and the projection for these years. And I want to finish by mentioning this document. In 2014, the World Bank and the International Monetary Fund, they thought this model was very interesting for them, and they invited us to participate in writing this white paper that is called Guidelines for the Successful Regional Integration of Financial Infrastructures. I think it contains all the lessons learned by us and by other group of central banks that did the same as we did in Asia and Europe. This document is the base for the G20 roadmap for enhancing cross-border payments. I invite you to read also this G20 roadmap. This is very interesting. I'm not going to mention because it has 19 strategies, but they are grouped in 5 different areas. The first one is commit to a joint public and private sector vision to enhance cross-border payments. And this is exactly what we are doing here in this meeting. The second area is coordinate on regulatory, supervisory, and oversight frameworks. I think if all central banks are in the same page, this can be done very, very easily. The third area is improve existing payment infrastructures and arrangements to support the requirements of the cross-border payments market. And as I said before, today, the infrastructures are much more strong and reliable and easy to use as they were 10 years ago when we began. The fourth area is increase data quality and straight-through processing by enhancing data and market practices. This is also very easy to do. And the final area is explore the potential role of new payment infrastructure and arrangements. This means that we should include all players, not only the traditional banks, but also the new players in this huge platform. So with this, I finish, and I'm ready to answer any question that may come. Thank you so much.
Okay, fantastic. Thank you for walking us through that, Fabiola. And yes, I would like to open the audience to questions at this point. I believe we have a couple of them queued. Before you dropped off, Fabiola, or while you were off, I actually had a brief discussion with Francis, and perhaps we can bring everybody back into caption now. And it was around the regulatory framework. So may I ask our backstage team to support us in posting that first question? The question from the question/comment from the audience really is a very impressive system that the DR has and others have developed similarly. What was the legal regulatory process like in starting off? And I think Fonty also had a similar question in terms of walking us through that, please.
Yes, at the beginning, we thought we needed to change or create national regulation, meaning laws and secondary type of regulation, and that was going to be so hard. So we decided, no, we are going to have an agreement. In Spanish is acuerdo. So this agreement was written by the Monetary Council. It is very short, and it contains the main principles that need to be complied with to manage a payment system. So these principles contained here are international standards, and they apply not only for this intra-regional payment system, but also for domestic payment system that at that moment didn't have any national regulation. So it was very good. It took us maybe 2 or 3 years to get it approved by all the congresses. It has to go to the Congress, and it has to go through the Foreign Affairs Ministry. But this is an international agreement, so it didn't take long in in the Congress to be approved. It took longer, going from one country to the other, and then getting together all the central bank governors to sign it at the same time in a special meeting that had took place in Costa Rica, I think, back then. So that's the main part. And I think with the CARICOM, that task is much easier for you because you already have a body that where everybody belongs there and that has a special set of rules. So this would be like a new set of rules for the CARICOM. So it would be much easier. And I don't think you will have to go through the process of going to the national congresses because that's complicated.
Okay, great. And indeed, Fonty, does that in any way, shape, or form assist you with your earlier question in terms of what that legal process may look like as you begin to decide on channeling that yourself?
Yes, I mean, I think what Fabiola would have discussed is like a treaty, pretty much, similar
Yes.
to a treaty.
Like an
So,
agreement, yes.
yes.
Correct,
So,
correct.
yes.
Okay, fantastic. So it certainly gives some direction in terms of what the possible option can be to get around the entire legal framework, which we know in our region can sometimes be quite a cumbersome and drawn out one. All right, I believe there may be another question. Francis mentioned interregional trade. Do you foresee any challenges with similarity of products amongst the jurisdiction?
Similarity of products among the jurisdiction, meaning that everybody have the same kind of products. Just referring to.
Correct. Correct.
Yes. I think the international the trade issue has been in the domain, in the political domain, even in the calypso domain, because I think there's a professor who's a calypsonian who had a song about it, where you know countries accuse other countries for reneging on the agreement because their goods are inferior, and of course the products are similar, um, and sometimes some countries feel that they get a better the goods from the outside is of a better quality. So I think what it does to us is for us to revisit and tell ourselves we should not maybe accept lower quality, but we should have for us to improve our quality. So that is an issue that has been around. It has been in the sphere for some time. But how do we get around it? Is for us to, I suppose, and it's just, we're just saying it, but I think it's serious. It's important that we need to improve our quality, because you do hear people saying that when they get goods from the outside, it's of a better quality than what the goods that are produced regionally. And I couldn't ask somebody to pay them money for a lower quality good just because.
Okay, all right, great. And that is fully understood. And I totally appreciate that we all have to, of course, ensure that there's a particular standard that we are all living up to in order to ensure that there is a uniformity. Okay, the questions are coming in fast and furious as we anticipated would be the case for this particular panel. Fabiola, I think we alluded to this earlier when you were offline. Do you think that CBDCs will eventually replace the need for ACH, RTGS, and the like?
When? The question, not if, it's when. And that would be my answer. It's a matter of when. I mean, our countries are still dealing with financial inclusion, as I said, with um, changing the culture of the people to accept money in digital format using cards. I just want to mention here that we're part of a Finnovista study, and it was very sad for me to discover that my country, Dominican Republic, has gone back in this. People here get subsidies and they use a lot of they use debit cards a lot. and we were measuring if they use the debit cards to pay with them in points of sale or to withdraw the money from ATMs. And we were doing good. I mean, the difference between using the card itself was going up and the withdrawal of money with the card was going down. But then for some reason, they started getting together. And last year, it was bigger the amount of money withdrawn from ATM than the use of the card itself, because it's a cultural thing. I don't know if it happens in your countries, but people think if they pay cash, they're going to pay less. It's not going to cost them, and that's something the private sector has to work with, to educate the customers that can pay with a debit card in the same way they pay with cash, and it's going to be better for them. So talking about CBDC, we are, going to many conferences. We are writing papers inside. We are working with the economist of the bank to see the possible implications of this. But to issue CBDC at this point, with this cultural gap that we have, I would say that us, as many other countries from the region, will need a little more time to do it, because we need to change this way of thinking. I think the next generation, the millennials, Gen Z, they will go naturally for it. And I think CBDC is very good for cross-border payments also, because it facilitates a lot and it takes the correspondent banks out of the equation.
Okay, so Francis,
on that note, yes, I wanted to comment on it as well, and I think it's for CAB to strategically look at it, and that's what I think the governors of the central banks were saying. Don't box yourself into one solution, because it is evolving, and the technology is influencing payments. So you don't want to go the regional RTGS, which is a long-term solution, and by the time you get it organized, then you have a CBDC solution in place. So I think we should be open-minded to all, because CBDCs, a lot of central banks are embracing it. And like Fabiola said, everything is going digital. Why not money? So I think we have to be open-minded to it.
So that really is a very good question, Francis. Let's look at literacy within our jurisdictions and CBDCs. And what do we really anticipate the rate of uptake to be like, given that there are some of the islands that still grapple with high levels of illiteracy, or persons who are simply not technologically savvy or comfortable with it? What would you say then?
Okay, I always say there is there's a saying, build it and they will come. I think that's the saying in economics. And I think what we don't want to do is to keep ourselves back because we're trying to accommodate a group who we think cannot get up there. If we had to take that posture, then ATMs would have been non-existent. I know people today who don't use an ATM, who are still afraid of the ATM, and the ATM has been around for 50 years plus. We have to look at the direction which the technology is going and embrace it. At least for me, I will say honestly, yes, the ECCB would have done the CBDC, the Dcash, and the uptake is still low. People are still trying to understand it, but that is no reason for us not to bring it out there. We want to develop our society. You know, you go to a foreign country and nobody uses money. Is everybody using the card? You know, and we know the virtues of not using cash. You know, so we want to take our country to the 21st level.
Okay, so I think I heard that challenge thrown out to CAB, Francis. So you know we're coming knocking at your door, because clearly we need to do a lot more education, public education, and perhaps even from the banking perspective. But I know that there are also some questions from our bankers as far as the adaptation of the new technology and what it may mean to them. I believe we have another question queued from the audience. Let's see if it addresses that. If countries are accepting crypto as a currency and mode of payment, why would anyone bother with banks' efforts, or can banks stop this trend or even keep up? Who wants to take a stab at that one? That is a fully loaded question.
Yes, a
Fabiola,
fully loaded
perhaps you
question.
do. Okay,
Okay.
Francis, go ahead.
Oh, sorry, I was saying ladies first, but yeah, I will go ahead. Um, I think what we at the central bank try to do is to differentiate between a cryptocurrency and a central bank digital currency. Now, the use of cryptocurrencies is not to execute a payment, it's a speculative investment instrument. So when you buy Bitcoin for $10,000 now, you expect Bitcoin to get to $50,000 and you offload it in the way you want to. Ethereum, etc. So the cryptocurrencies, we see them as speculative investment instruments, not as a currency to execute a payment. And that is what I want to create a distinction.
Yeah.
I think, oh, sorry, go ahead, Fabi.
No. I wanted to jump in, but finish, please. Go ahead. Go ahead.
Yes. And I think also that banks should not get frightened of the technology, embrace it. Banks will be able to issue, because with the CBDC, the Dcash, we are utilizing the banks to help us issue the Dcash. They're part of the equation. So
okay, okay. All right, we hear you, and I think you may get a couple more questions. This panel is clearly one that's going to go slightly over. Over to you, Fabiola.
Yeah, I want to pay a lot of money to the person who made that question. Yeah, because that's the question. Yeah, I agree with Francis. Central banks consider cryptos as a form of investment, a very high risk form of investment. And some countries are already issuing regulation for them. But the thing is that they do not want to be regulated. They were born for this, for being outside of the formal financial system. I'm a strong believer in the financial model that we have in the world. I think it works. I think it can improve in many ways, but I think it's a correct one. It's the right one. I'm talking about the financial model of the world, central banks, financial institutions, now the new players, and the national payment systems and the international ecosystem. And that's the way I see it. And it's multi-currency. Can we add a payment instrument or a financial or a currency that is not issued by a central bank? I don't think so, because the beauty of the financial model that we have today is based on the backup that central banks are for everything that might go wrong in this financial system. And we are the responsibles to protect the customer for losing their money at the end. So with cryptos, we cannot do that. We cannot protect the customers. So are cryptos going to be here for long? Yes, I think they will, but I think they are going to be operating in a parallel system, and that people know the difference between a formal financial system and this type of speculative investment. I might be wrong in 10 years from now. I might be retired. I will be retired 10 years from now. But this is what I foresee. It is very hard because we get this question in every public activity we go. And the Central Bank of the Dominican Republic has been firm with saying, if you do it in your own risk. We will not back you up with this. And it is in our webpage. This communicate, this note, we published it maybe 2 or 3 weeks ago again, because there are many Ponzi schemes. The problem with cryptos is that you cannot tell the difference between a normal operation or a money laundering operation or terrorist financing operation or drugs operation. We cannot tell the difference because there is no one to check on what's going on there. So that's the issue. We need to protect the customers, and with that, we cannot. And they don't want to be regulated also either.
Okay, and I think that in itself sums up the attraction that most people have in those sorts of currencies because it is so much more relaxed.
The attraction of the forbidden.
Yes, yeah, exactly. That which makes it more attractive is also what makes it so much more risky. And if we take that question back, we started on that conversation, and I know that we've gone slightly over time, but I think it's really a good one. And there's another question. Can we have that posted, please? There has been some discussion through the decades about a unified Caribbean currency. What are the pros and cons, challenges, and opportunities? Francis, I think this one is definitely for you.
Yes, it's definitely in my plate. Well, we would have seen the experience of the euro, the European Union, in developing that particular currency. Now, monetary economists will tell you that your currency it should be aligned or assigned or aligned to your demand, your economy. With us, the demand for the currencies vary. The amount of reserves vary. And people, we see ourselves as sovereign countries. It can work, but what it is, every country, as the euro would have done, you have certain fiscal benchmarks that you have to adhere to for your currency, for that currency to be protected. So therefore, it would be difficult, or you would need to have, stringent measures, an understanding among all the parties involved that this is your debt to GDP ratio should be that within that range. Your revenue intake, your expenditure, etc. So those fiscal benchmarks would have to be adhered to by all governments. And I'm not sure that we have the wherewithal to do that. Look at Europe. I mean, it has worked for them for some time, but you see England jumping out. And a unified Caribbean currency will not only redound just to economics. You want to see more than just the currency as being unified. You want to see, because trade and finance, they go together. So you would want to see more things aligned as it relates to the unification. So it is theoretically a good concept, but practically I can see a lot of problems, given that you need, for your currency to maintain a certain value, you need to have certain disciplines, certain fiscal benchmarks. And I don't know, well, perhaps it can happen, but I can see a difficulty in that happening.
Yeah, okay. I'd like to add, I know we are out of time, but
no, that's okay.
Yeah, when we began working on the system, we were thinking about a common currency for the cross-border payments in intra-regional. And we even think about a currency that existed in Panama many years ago that nobody uses anymore, because the currency needs to be included in the SWIFT platform. It has to be declared there. It has to exist. So, but also we decided not to do it and based our operations in the US dollars. We reference the US dollar. That's the money we use in the back office for all the transactions, and the transactions can originate in the local currency. I mean, with the systems, with the technology we have today, it doesn't matter if you have or you don't have a unified currency. You don't need it because the systems work it out very easily. And as the payments go in real time, there is no danger or risk of losing value, of exchange loss of value. So I don't think it's an issue anymore. Okay. Everybody can keep its currency and it works just fine in the infrastructure.
Okay. All right. Thank you for that. I think there's one more question for you. I'm not sure if there are any other, but I'll be queued accordingly. So far, has the DR experience helped the CBR's challenge? That is the implementation of your RTGS. Have you found any benefit from a correspondent banking relationship? Was that a challenge for you to start with?
Um, no, we actually did it because we had a lot of trade among the countries and the difficulties that existed to get the money on time from one country to the other. So the system was defined initially to help with the financial part of all the trade going on among the countries. And we use only one correspondent bank that is tied to this account, and the account was opened by us, the hub, the central bank that is the hub, and we haven't had any issues with that, and either with sending money to that account, because all the senders of money to that account are central banks, so there is no issue with correspondent. They are very happy that their clients are only the 6 central banks. And the central banks are responsible in their countries for taking all the measures. And we, in our guidelines to operate the system, we defined that the issuer bank of the payment is responsible for do the compliance process with the client. So it has worked fine so far. We have some payments that are sent back from the receiver country to the origin country, but this happens even with correspondent banks in the middle. So we're happy with the performance of the system so far, and correspondent banking hasn't been an issue with this. It helps because you don't need a correspondent banking to pay, because the central banks take the job of keeping the account alive. And if one country doesn't have money in that account, the payment doesn't go through.
Okay, fantastic. I think that our discussions this morning have certainly given some deeper insights and allowed the questions to come in from the audience as well, so that they too can get a level of comfort with the entire process as well. Francis, this should have helped as you move forward with your own decision making in terms of what will be the best alignment for the region. So I want to take some time to thank you this morning for being with us and for sharing so openly. Wish you every success, Francis, as you undertake the process of determining how we move forward in the process. Fabiola, as always, thank you so much. Quick recovery there earlier this morning, but we didn't lose a beat, did we?
Rain. I think it's raining here a lot.
Yes.
So
Yeah.
Mm-hmm.
Okay, that's understood. But we did good. We did good. We got it back. All right. So thank you so much. I hope that you will stay with us. Thank you.